What up, guys? It's KOJOFOREX here, and as you already know, anytime you see me on your screens, then it means that we're about to learn something new. Today, I decided to teach you guys something that I slightly usually will touch on day to day, but I've not really fully sort of cut out to shoot a whole YouTube video on. So I intend to do that today, and that video is titled Most Powerful DXY Strategy That Will Change Your Life, right? So somebody may be wanting to ask already that what is DXY, Kojo? So when we talk about DXY, it's a short phrase or short term for denoting the dollar index. And again, somebody may also want to inquire that what is dollar index in the first place? So dollar index is basically an instrument that shows the strength or weakness of the dollar. So it's basically a basket of currencies compared against the United States dollar that shows if the dollar is gaining some strength or if the dollar is basically gaining weakness. So it has a variety of weighted averages, right? So it's like when you put the United States dollar here, we have a constituent of pounds, we have a constituent of euro, constituent of JPY, constituent of Swiss franc, and so on and so forth, right? But they are not all equally weighted. When I say they are not all equally weighted, I mean that the amount of comparison that we're going to have in that constituent of currencies being compared against the dollar are not of the same percentage. So let's say in the dollar index, we may have like pounds being, let's say 40%, euro being maybe 30%, Japanese yen being 10%, and so on and so forth. And then we use that as a major basis to measure if the dollar is gaining weak or gaining strength among its comparative currency pairs, right? Now, what you're going to notice on a regular basis is that the dollar index is also represented just like any of the currency pairs. So it also trades technically and then fundamentally, just like you would have every regular currency pair also trade, right? So if you see the dollar index literally trading on high low formation, it means that the dollar is trending on an uptrend, and then the dollar long term is strong. And if you see the dollar index trading on a lower low formation, it means that the dollar basically is continues to tank down or lose its strength globally. Now, if you understand what I've just said from the beginning of the lesson, then you're going to also understand that per the fact that every currency pair that is measured or weighted against the dollar index is not equally weighted, or the percentage are not the same, it means that some currency pairs may be literally very closely related or highly correlated to using them as a basis of looking at what is likely to happen with the dollar index, and some may not be as tightly close or tightly correlated as such, right? So I'm going to lay out, when I look at the dollar index, what sort of instrument do I particularly look in terms of comparison, whether it's being directly correlated with the dollar index or inversely correlated with the dollar index before I take any sort of a trade decision, right? So first off, with the directly correlated one. So looking at the fact that I said the dollar index is weighted average of comparison between currency pairs, then when we talk about directly correlated, then there's one currency pair that comes very close in terms of directly correlation. When I say direct correlation, it means that when you find a dollar index in an uptrend or a swing point, there's possibility, about 90% correlation or possibility, that you're going to find that currency pair also being in an uptrend, right? And that currency pair is basically United States dollar versus the Swiss franc. So USD Swiss franc is the very directly correlated pair with the dollar index. Now let's head on straight to the inversely correlated one. So when I also talk about the inverse correlated ones, and I'm basically talking about the fact that when you see those currency pairs going up, you might likely find the dollar index trending down, and when you see the dollar index trending up, then you might likely also see those currency pairs going down, right? So you first want to even have a good sense of direction of the dollar index before you even want to look into those currency pairs, because it serves as a catalyst upon which most of those currency pairs would even act in the first place. One of those currency pairs is the GBP USD. Then the second one in order of merit is the Euro USD. Then we're going to have the New Zealand USD. Then fourth but not the least, Aussie dollar USD. So now that I have all this spelled out, let's go right into the chart and let's look at it practically, how we could have been using the dollar index as a basis for determining the directional movement of the market. So I'm going to use a particular week where we had a clear cut out scenario like this playing out, and we're going to look at how we can subsequently learn from it and then take imperative decisions when we are looking at analysis on the market. Yeah, guys, so basically when you look at what I'm talking about from the beginning, I'm saying that you want to look at dollar index as a basis of determining the strength or weakness of the dollar, and then not to waste much time and not to also have this video being so long. We're going to look at particular scenario in the market where we had the dollar index acting as a most sensitive region or a sensitive part of the market, or a major determinant in telling if the market is going to go up generally for the currency pair that is inversely correlated with it, or it's going to go up generally with the currency pair that is directly correlated with it. So we're going to look at this particular week in the market, right? So that particular week in the market cuts out to be the past 3 weeks of the market, of the trading week, right? So here is the last week, here is last 2 weeks, and then currently here is last 3 weeks, right? So if you're looking at any activity that is happening here, then we're looking at activities on the market that happened last 3 weeks. And I want to use last 3 weeks scenario to be able to define or explain exactly what we're trying to learn today, right? So this last 3 weeks trading activity. So yeah, if we look at last 3 weeks, and how do I know that this is last 3 weeks? Basically because I have these vertical lines here which kind of cuts out every trading activity for a particular week. So this one basically tells me that this is a trading activity for the past week, this one's last 2 weeks, and then this is last 3 weeks, and so on and so forth, right? Yeah, I'm going to teach you guys more about it in my subsequent videos as well. But looking at the fact that, yeah, we had last 3 weeks trading activity starting from here, trading all the way down, perhaps rejected from this resistance and coming straight into this support region. How do I know there is a support? We had already established a reversal here and established a wick tap into this zone here. So here was clearly cut out as a support zone, and then we could potentially have the dollar index reacting here exactly when it was looking like this, right? So upon looking like this, coming clearly into the zone and having a few candlestick reversals and patterns, then we could have potentially been telling that from this range, then we could have the dollar index gaining some strength. And then if we have the dollar index showing its teeth or potential strength gaining here, then what does it imply? It means that we could have the USD Swiss franc, right, which is USD CHF, potentially also going up. And then what we have coming down, I've listed them already. We have the GBP USD coming down, we have the Euro USD coming down, we have the New Zealand USD coming down, and we have the Aussie dollar USD also coming down. So all of these will be trading downwards while the dollar index will be trading upwards. So let's look at technically what these currency pairs were doing while we had the dollar index set itself out as if it was going to go on the upside, right? So a potential way to do that, which is going to give us that good clarity of what the market was doing, is when I divide this chart here, so that we use the divided screen, and then we're going to now go on to GBP USD and then try to use the same analogy that we're doing here to calculate or sort of backtest. So yeah, pardon me, let me just disconnect the symbols so that we can have different symbols displayed in different part of the portal. So guys, let's learn something here. I told you that sometimes we have the correlation being extremely deep, and sometimes you have the correlation not as strong as it is, right? So we're basically talking about last week, which I'll denote by 1, last 2 weeks, which I'll denote by 2, and then last 3 weeks here, right? So the same with here, last week, last 2 weeks, and then last 3 weeks. So if you look at this, just exactly in the midweek, let's look somewhere around Wednesday, because the market would have started from here Monday, Tuesday, and then here would be perhaps Wednesday or Thursday. Wednesday, when the market had hit that support level, where was GBP USD? It was also basically here. So you could clearly see that when the XY had set itself to trend upwards, even though the GBP USD was also trending downwards, it was not in the nicest of fashion, but we had some sort of reaction rejections, and then the market ended up closing bearish within the week, right? But now let's look at the other comparative currency pairs as well, which is using Euro USD in the same scenario. So now if you're using Euro USD, let's also in the same vein count 3 weeks into the past week. So we'll look here and say, okay, we had here being just last week, last 2 weeks, and then last 3 weeks. So you can clearly see how beautiful this inversely correlated reaction happens here, in the sense that when we had dollar index basically trading from the beginning of the week all the way down here like this, we had the Euro USD also basically trading from the beginning of the week all the way up here like this. And just when we had the reversal happening in that support region, and then the dollar index started trading onto the upside, what can we concurrently see happening in Euro USD? We basically had Euro USD also trading directly onto the downside. That's also a very powerful indication of what you're supposed to expect happening when you're comparing inversely correlated and directly correlated pairs with the dollar index. You can clearly see that if we continue this within the second week, we still had the dollar index being extremely bullish, and then at the same time we had Euro USD being extremely bearish, and then we had some level of choppiness happening here, also signifying the same type of currency reactions or technical reactions here. And then eventually we had a sharp push on the downside, a sharp push on the upside for dollar index. We had a push on the downside as if the market was about to break this trend line. In the same way, we had a push on the upside as if the Euro USD was about to change its directional movement. And then we have a big bullish candle right back into the top like that. Then we clearly also have a big bearish candle right down for Euro USD. So that tells you how deeply correlated the dollar index is with the Euro USD. So that's why I tell you that if you really want to spot out strength or weakness in the dollar, for you to have a good basis of analysis technically before you taking a decision on the dollar, then you want to first look at the dollar index before you look at even comparing it to what is currently happening in a currency pair like Euro USD, and that gives you an added edge in taking decisions on the market. Let's look quickly at the comparison for Aussie dollar and then New Zealand, then we'll bring this lesson to an end. So just as we've been doing, guys, just as we've been doing, if we trace this one from last week, which is last 2 weeks, which is this one here, and then last 3 weeks, then you can kind of see some technical happenings in the same vein that we've been discussing, where when we had the dollar index trading on the downside, we had New Zealand USD also trading on the upside. When we had the dollar index reversing on that support basis, we had New Zealand USD also trading on the downside. So those are typical examples where you can use dollar index as a trick to be able to gauge whether you're going to buy or sell in the market, right? So that's an example for New Zealand USD. At the same time, you have this, cross-reference correlation here, or perhaps a second edge in the sense that we had this market already visiting this resistance region before the dollar index as a third confluence. Then you can take this short sell here and make money. In fact, this trade was one of the trades that was sent to the community members and the VIP members in my KOJOFOREX Telegram channel. So that's why you need to click in the link in the description to join the KOJOFOREX Telegram community if you haven't done that, because my subscribers basically enjoy this type of signals for free. And you also want to connect with me on social media, especially on Instagram at KOJOFOREX. Let's look at the example for Aussie dollar USD in the same vein, and then we'll bring this lesson to an end. So yeah, basically using the same principle that I've been doing from the beginning, we have 1 week 2 here, and then week 3 here, right? Now the interesting thing you're going to see here is that look at this sort of a resistance area here, rejection in that particular week. But this week was kind of a week where technically we had a very positive fundamental event coming in favor for Aussie dollar, and Aussie dollar is directly also related with whatever is happening in the New Zealand economy. So even though the dollar index was setting itself out to be very strong because of that cross reference, or because of that fundamental event that had easily been released, then it was very difficult for the dollar index to have an independent strength in pushing the Aussie dollar US dollar into the downside, right? So all we had was just a short brief push on the downside, just because we had the dollar index already exhibiting a very strong momentum to the upside. Then later we had Aussie dollar USD basically breaking onto the upside based on that fundamental catalyst that had already set it out, which is a little bit complicated for beginner traders to understand. At the moment I can understand that, but the more we are learning and then educating ourselves in this vein, I'm sure that most of the things that I talk about will eventually make more sense and the dots will start connecting for you. So if you did enjoy these lessons, you know what to do already. Smash the like button, subscribe to this channel. We are gradually growing, and I've promised you guys that we're going to have consistently 1 video a day, perhaps for the longest possible of time until we hit that 100k mark. And then it's going to be exciting journey of continuous lessons and teaching you new things all the time. Also make sure to click in the link in the description to join the KOJOFOREX Telegram community, turn on post notifications on this YouTube channel, and then follow me on Instagram at KOJOFOREX. I hope you enjoyed this lesson. Without wasting much time, I'll see you in the next one tomorrow. Peace, guys.